Joining us from Boston is Jeff Lindsey. He heads up BlackRock's large cap growth team, as well as the firm's capital appreciation fund, whose holdings read like the who's who of U.S. technology stocks. Apple, the #1 holding in his portfolio, has been there for quite some time. Jeff, great to have you with us. What do you make of this announcement from Jobs, or from Apple?
Well, certainly everybody knows that the stock price is impacted by any issue with Steve Jobs' health, and it's a very inexpensive stock. Much more important, of course, is the actual sales and products and momentum of the company in the future. And the big story now is the iPad. So, I love to see that he's healthy. It's good. The investment thesis we have, making it our largest holding, has everything to do with the products and the long-term future.
Jeff, speaking of products, what could come out of this developers conference next week is more details on the new music strategy at Apple. After taking on the world with iTunes over the last decade, now they're getting into the digital music locker business, where Amazon's making a push, a lot of companies are making a push. You're a shareholder in Amazon too. What will you be most interested in hearing out of Apple next week on that front?
On the music front, you're asking?
Yeah.
Well, it's just like so many of their products. They have these huge market shares, and it wouldn't be really sensible to expect them to hang on to them for years and years and years. So, I'm not sure exactly what I want to hear from them, but we want to hear a strategy where they can defend themselves and not find themselves, people just seeking other cheaper alternatives very quickly and easily. And part of the strategy of the company is to internalize all these products such that you get hooked on them, and the way they work is so important to you that you don't care too much about a few dollars to do something a cheaper way. So, as long as they're staying in the keeping up. Adding some functionality and holding on to the customers, that's what I'm looking for.
Hey, Jeff,
again, the iPad is the big story going forward.
Speaking of the big story, obviously, of their product mix as well, but we want to focus back on Jobs again, because his presence really does propel the stock price. Like you said, you have Apple as one of your top holdings. BlackRock is as a whole is one of the biggest holders of Apple stock. Is there any concern from you or your team at BlackRock about what the succession plan is at Apple once Steve Jobs is no longer really there actively in the role?
No, I would not say that is a concern. Tim Cook is the obvious successor. We're quite comfortable with him, and the cheapness of the stock simply reflects these concerns. And so, I don't expect to react to any piece of news about Steve Jobs' health. It is an issue. There is a pretty obvious successor in place that we're comfortable with. So, we focus on the business much more.
Jeff, you keep talking about Apple as a cheap stock. Since the last time you were on, LinkedIn has gone public. Everybody's talking about a bubble in Silicon Valley. First of all, I should ask you, did you participate in that LinkedIn offering? Have you bought any LinkedIn shares, since you've got a lot of technology companies?
Yes, we did participate in the offering. If I can make a general comment about these stocks and the obvious question, I think it is likely that the total of all social networking IPOs will be overvalued, because everybody wants to own the one that becomes the next Google. One of them may be the next Google wild success story. So they're not all going to be overvalued. They're good business models. There are weak ones that don't appear sustainable, and we'll evaluate them one by one. We did participate in LinkedIn.
Is that why you participate in LinkedIn?
Sorry, why?
The fact that what you're saying is that eventually they will be overvalued, but you bought in first. You wanted to be there first.
That's a dangerous game, to buy something only expecting it to be overvalued. So no, that is not the reason. It was analysis of the company at the IPO price that led us to buy it.
Jeff, just to clarify, since Apple's your top holding, where does LinkedIn fit into your holdings? Like, how much LinkedIn do you own?
There's no comparison there. Apple is multiples the size of most of the other stocks in the portfolio, actually.
Earlier we had ran a story, Jeff, that I don't want to harp too much on this, but, Peter Thiel had talked about how, Wall Street has gotten it wrong on LinkedIn, that, in fact, that they had undervalued the company, and that's why the stock had gone up so much on its first day of trading. Give me your view on that comment from him.
Well, I think there's an effort on the part of every deal to find a price that, will first of all make sure the deal gets done successfully in the market, and nobody wants to buy a stock and then subsequently watch it go down. So when there's so much excitement, and I'm not on that side of the table. I'm just giving my, view of observing this sort of thing. It's got to be a tough thing to figure out how much of the really near-term excitement to take advantage of and price it there. And then the risk is that no one who bought the stock on the deal continues to hold it in the future because its future is the stock price goes down from there. Nobody really wants to see that. So I don't know what to say. Was it undervalued just because it went up? I don't know. We could say that about every hot deal, and that's not really the right conclusion.
No, but Jeff, given what you've seen with what's happened with LinkedIn, would you buy more into these social networking companies as they come to the markets?
Okay, thank you so much.
Yeah, I really, I wish I could give you a simple answer to that question. We're going to evaluate them one by one, and we're going to watch the stock prices on a day-to-day basis. So with the volatility that we're likely to see in such high-growth companies with little or no profitability, my answer is that I'm probably going to trade them significantly more than I would other larger, more established companies. And much depends on the stock price today and next Tuesday.
All right, Jeff, thank you. Really appreciate you joining us. Jeff Lindsey of BlackRock. He oversees a total of $12 billion in his large cap group.